With supply chains becoming more complex, you need to stay on top of the latest logistics developments. So if you work with logistics, you need the Beyond the Box podcast from Maersk. It's the easy way to keep up to date with everything from digital disruption in logistics to the need for supply chain resilience in today's market. Find out more and keep ahead of the game with the Beyond the Box podcast on logistics insights at maersk.com/insights.
I wanted to bring on my friend David Bahnsen. We've had a great show, by the way, so far. You know, I always say I'm not the best radio talk show host, but I get some of the best guests to come on. And David Bahnsen is a financial genius. He has been a longtime friend. He's an author of incredible books, including my favorite one is called a book called There's No Free Lunch, which I put right next to my bed because it's one of those books that you can just flip through and learn economic lessons. And I like to read it for 15 or 20 minutes before I go to sleep, not because it puts me to sleep, but because I learn a lot from that book. That one's called There's No Free Lunch. And he has a book that just came out recently. I think, David, this is your last book, but you're so prolific, I can't always keep up with you. Full-Time Work and the Meaning of Life, which I love that too, because I believe, as David does, that there is dignity and meaning and fulfillment in work. And so, David, thanks for joining this afternoon.
Well, wonderful to be with you. And yes, full-time is my last book. Unfortunately, I'm too busy working full-time to write another book.
Well, you seem to churn them out so quickly. And look, you're one of the smartest financial analysts I know. You've been incredibly successful. You're also someone who has a keen ear and eye on what's going on with politics. So let's talk about your how you view the economy and the stock market right now, David. I'm a little worried about, I see inflation coming up again. I was looking at the commodity index, and since the Fed did their jumbo rate cut, commodity prices have zoomed up by 11% in just a few weeks. That's a gigantic increase. But I wanted your take on the health of the economy and the markets.
Yeah, so let's first talk about that point, because it's an important point about commodity prices. Something else happened at the same exact time that the Fed cut rates, and it is giving a mixed signal. It's very legitimate to look at commodity prices and wonder what's going on in inflation. But what is a larger factor in commodity prices jumping the last 2 weeks? The Fed moving 50 bips, which really is geared towards trying to unfreeze our housing market and avoid a lot of these corporate debt resets that are about to reset at higher rates, or China throwing the kitchen sink at lowering reserve requirements, lowering their policy rate, trying to increase construction activity, they have 90 million units of unsold housing. Iron ore and copper are really levered to China. And I think that commodity prices moved in the last 2 weeks far more around global, macro China conditions than they did anything the Fed is doing.
Mm-hmm. So what does that mean? I mean, what does that mean for investors then?
Well, I mean, as far as the outlook for investors, the biggest problem investors face is not necessarily will they or won't they with the Fed, will there or won't there be a recession, will there or won't there be a Republican president. All of those things matter. All those things are kind of looming and uncertainties. But the biggest issue is, let's say you've got a good result, whatever a good result means, around the economy, around monetary policy, and around the election. You still just have an S&P 500 that's trading at 21 times next year's earnings. And I think that that's the biggest risk investors have, is that by buying the whole market right now, you're just thinking that a very expensive artificial intelligence story gets even more expensive. So we have a really hard time with that story. We don't think it's a great thesis for investors to purchase. We're much more selective, more value-oriented, Steve, and more dividend-oriented.
So time to be cautious. I mean, this is a market that's been on quite a tear for the last 18 months or so. So it sounds like you're cautious.
Yes, and the thing I would say is that the market has partially been on a tear because earnings have grown a ton. And so I look at free cash flow yields and I look at earnings because I look at data that can't really lie, that can't really be obfuscated. When companies are making more money, markets are supposed to go higher. Well, companies have made more money. That's a good thing. We should all be happy. Margins have gone up, profits have gone up. But when the stock prices go up far more than that, well, we've seen this happen a few times in the last 20, 30 years. And generally, it requires there to be kind of a correction or a bear market to reset things. And, NVIDIA is making a ton of money, but it's trading at 70 times earnings. And Microsoft's making a lot of money, but it's trading at 50 times earnings. And so I don't think very many people want to wait 50 years to get their money back.
So you bring up NVIDIA, and my wife does our investing because she's smarter on this stuff than I am. And she bought a ton of NVIDIA stock about a year and a half ago. And we're like up, 4 or 5X or something like that on that. It's one of the few great investments we've made. So do we sell it? What do we do now? Do we sell it?
Well, look, I don't think people like paying capital gain tax. I don't know if it's in a retirement account or not, but, I would certainly be trimming the gains back and being very grateful for your wife's good stock pick. But yeah, I think it's bubbled up. And I think back, Steve, that you remember it well, those companies in the late 1990s.
I do.
It's one thing to make fun of the pets.com stories that never made money and then they went away a year or two later. But I'm talking about really, really profitable companies like Cisco and Juniper and Intel. Right. They still are not back to their highs from then. And it's not because they didn't make money. Microsoft didn't get back to where it was in 1999 until 2016. And that's one of the most profitable companies in human history. It was in a bubble. And I think NVIDIA is in a bubble.
Oh, you do? Okay. What about any other companies you think that are in a bubble?
Yeah, I think the whole AI type story.
Wow.
That there's just a lot of companies that have not figured out how they're going to make any money on it. And then companies like NVIDIA that are making a fortune on it. The problem is they're making money as a bunch of other companies are buying the stuff. But then those other companies haven't figured out. And if you start seeing the order flow for Microsoft and Google drop, it's inevitable. It's going to happen. It's just a matter of when.
So we only have a few minutes left. I'm talking to David Bahnsen, who is an extraordinary financial analyst and author of many great books, including There's No Such Thing as a Free Lunch. And so, David, your book on full-time on employment and the fact that we don't have enough people working is so important because it's not just, and we've had this conversation before, but I want you to say it again because the message is so important. That work is important, not just because it earns a paycheck and helps pay the bills, but it's important for the people's sense of self-worth and human achievement and fulfillment to be able to work. And I'm very concerned. I see a decline in the number of people who are working versus, say, 20 or 30 or 40 years ago.
Yes, and I think it's worse than I'm able to really articulate because, first of all, the primary drop in our labor participation force is 25 to 35-year-old men. Okay, wow. 25 to 35. That's when you're supposed to be in the prime working age years of your life. Yes. We have 3.3 million men. 3.3 million. Look, there's 1.1 million women trend line that are less, but in that age bracket, oftentimes when women are having kids, there's a dynamic at stage of life where they will leave the workforce for a time.
Hold on. Why do you think? Because I don't want to mean to cut you off, but I want to get to the main point here, which is really important.
Yeah,
I agree with you that I have three sons that are in that age range, and they're doing pretty well, but they have a lot of friends who are not working. And why do you think that is? I mean, what's happening to these young males?
Well, I believe it's very cultural, and I've become very fond since the COVID moment of the line. You learn how to be unemployed. Okay, you lose your touch, you lose your discipline, and then you get accustomed to how to game the system. The food stamps here, and the unemployment benefits there, and living on mom and dad's couch there, And I think that's the problem is that sociologically it's become acceptable. And I think that, Steve, I'm a man of faith. I think that there's a loss of spirituality, there's a loss of purpose, there's a loss of morality.
I think
this legalization of marijuana has been a terrible thing in terms of what it's done in our workforce. All of these factors play in.
And by the way, I think you're even I, I'm 64, and I lived through, as we all did, COVID, and it changed the way we work. And even my own productivity is not what it was before COVID. I find myself, I don't go into the office as much. I'm not as productive. I feel I slough off more. I think I agree that we've kind of lost the value of work. And work is so important. By the way, you've shown in your book that people who work are happier than people who don't work.
Yeah, there's no question. And what I tried to do in the book is show why that is. And I really believe it's intrinsic to the human soul, that there is something about the purpose of usefulness. It's not about money. Because if somebody wins the lottery, they're going to be happy that they can pay their bills. But when you can have your needs met by meeting the needs of others, you feel useful, you feel productive, and it feeds self-esteem. And I just think that there's a virtuous cycle from work that is both economically and spiritually productive, and the opposite is true when people aren't working. It's why the labor data every month drives me crazy, because we're focused on who has jobs, who's looking for one, but we need to be focused on who isn't even looking for one.
I couldn't agree more. And the government is undermining human happiness and achievement and the prosperity of our country by paying people not to work. I mean, we don't want people to go hungry or homeless or, suffer from deprivation. But every one of these programs, in my opinion, every one of them should have a work requirement for able-bodied people. Don't you agree?
100%. And the work requirement for welfare passed in the Gingrich-Clinton reform of 1995 was one of the best things that happened. And it made people happier. The happiness index went up, not down.
That's amazing. David Bahnsen, thanks for joining us. Really good stuff, folks. This is the More Money Show.